Welcome all for another podcast of Money Talks with me, your host,
The Wealth Whisperer.
The topic today is maybe not the most exciting topic, but as far as how important, very. Today I've invited two industry experts to speak about something we all need, and for most of us has gotten higher on the radar in the last few years as costs have risen. It's not their fault, okay?
Sorry, Rob.
Very few have been as obvious as the cost of home and auto insurance. By no means is the goal of today to kill the messenger. It's actually the exact opposite. I know that our experts are prepared to speak on how to help manage the costs of necessary policies, but also on how to avoid traps and using these premiums where they will be most beneficial. Welcome, gentlemen.
Thank you. Thanks for having us.
Our guests today are Marc McNulty and Mike Schanne, two gentlemen that I have known for a very long time. Marc McNulty is the Chief Operating Officer of the Yule Agency. Yule Agency has been around since the 1950s and is one of the largest property and casualty agencies in Dayton. Some of you from Dayton may know the name Big Bill Yule from back in the day. And yes, he started the Yule Agency. Also with us is Mike Schanne, as I said. Mike is the owner and president of Mike Schanne State Farm located in Middletown, Ohio. And Mike brings years of hands-on experience helping individuals, families, and business owners navigate the often complicated world of P&C insurance. All right, gentlemen, time to jump right in. I'm going to kick it off by apologizing because the reason this has moved up on everybody's radar certainly is because there's been a little bit of sticker shock. And I said, it's not here to kill the messenger. You guys don't set the pricing. I'm sure we all have our thoughts, and many have read up on the topic. I hear things like construction costs, catastrophic risk. It would not be unheard of to be paying premiums 30% or more than one was at the beginning of this decade. Marc, do you mind starting with what is some of the lead matters that have sort of brought us to this point where we are?
Well, you touched on a couple of them, Rob. So 3 years ago, we had $28 billion weather events. In 2024, we had 27. And then last year, we had 23 of those.
How does that compare to, say, back in the past?
Back in the past, I mean, it was, years ago, it was unheard of to have billion-dollar weather events.
Okay.
So it keeps increasing year after year. And the thing to keep in mind, last year, with 23 of those, we didn't have a single hurricane actually hit the continental United States. So a lot of these storms are in the Midwest and, starting to affect Ohio as well. And so that just drives up the cost of claims when you have tornadoes and lightning and hail claims and all these different weather-related events.
So it's not billionaires trying to hold down the small guy?
No.
Oh, okay.
Not at all. And then, you also touched on the increase in construction costs. I mean, lumber prices have actually started to come down, but a lot of the other, paint, drywall, roofing, et cetera, have continued to increase. We actually just learned from Chubb Insurance.
Oh, so now everybody needs to have roofs?
Yeah, exactly. Labor costs have actually, for concrete masons, have gone up 16% year over year from last year versus this year. And there's an industry shortage in a lot of these trade contractors, which
just exasperate. Doesn't matter. Well, it's the world of which we live in. So let's do what we can today to try to help people navigate all this. Now let's talk about protecting our listeners. Some of the listeners may be very risk adverse and are insured to the hilt. Others may be willing to share some of the risks. I'm sure that U.S. consumers sometimes get too cute in the process of trying to save a dollar. That being said, what are some of the biggest mistakes where your clients are underinsured in an area where a loss can be financially devastating? Michael, start with you.
I would say probably the liability arena.
Okay. I read about that recently.
People don't, I think your firm does a great job of pushing people to have that discussion and understanding the risks of not being well insured from a liability standpoint.
Yeah.
It can happen to anybody at any point.
Mm-hmm.
Families with youthful drivers are one of them that is a concern.
Okay.
Because ultimately that child is looking at their phone and goes through a light and causes some damage. And so you don't want that to come back on your family. So we certainly try to have those discussions from a liability standpoint of to protect that nest egg going forward.
Okay. So for the layperson who's like, as far as knowing what liability means, I know it's something that I've seen on my deck page, if they even know what the word deck page means. What exactly is liability?
Sure. So when you're at fault in an accident,
Okay.
that's what goes to the other party to pay their medical bills or to pay the repairs on their cars
Or if they sue you.
or property damage.
Is
Or
that
they
where
sue,
liability comes in?
or they sue you.
Okay.
And that's another reason for some of the upticks is there's been a lot of frivolous litigation going on.
Yeah.
And that's another problem.
Shocking.
That's another problem.
Lawyers are suing people?
That is another problem.
No way.
Of the premiums right now.
Okay.
Mm-hmm.
What are the ranges of liability then? You know, give me an example of somebody. Okay, I'm sitting in front of somebody who, you know, they're worth a few million, you know, a few million or more probably doesn't matter, but they're worth a few million. What does that conversation sound like from a liability standpoint, Mark?
Well, I mean, basically, we want to talk about, you know, how much of your assets could possibly be exposed in the event of a lawsuit. Okay, if they're worth a couple million, do we need to get a $2 million umbrella or $3 million?
Okay.
And, you know, the one thing to keep in mind is the cost for a personal umbrella is really not that expensive.
No,
you could get
maybe a couple of $100 per million.
You got it. So, I mean, you can have a $1 million umbrella for somebody with, you know, home and 2 or 3 cars, and it's going to be $200 to $300 typically. Now, of course, you can cover watercraft or motorcycles, or if you have rental properties that are personally titled, those can also go underneath that umbrella. So
Okay.
that's something to keep in mind as well. That'll add to the cost because there's more exposure. But again, for what you're getting, the cost is quite reasonable.
Okay. Well, so is there just a normally not counting the umbrella, you're normally getting around X in liability?
It's really up to you. I mean, state minimum in Ohio is $25,000 per person.
Okay.
$50,000 per accident.
Well, I hope most of the listeners today have more than $25,000 in liability.
But you could go split liability to $250,000 per person, $500,000 per accident, or even combined liability up to $1 million.
Okay.
Mm-hmm.
So how you couple liability with umbrella? Is there a way to save money and sort of manipulating and put this much under liability and this much under umbrella? How do you guys help out the people the clients you like?
Well, typically what we try to do is we encourage high underlying limits to start with.
Okay.
So, you know, just mentioned, you know, you can have different ways of doing auto liability, for instance. You can have split limits or combined single limits. We try to encourage our clients at a minimum to have $250,000 per person,
Okay.
$500,000 per accident,
Okay.
and then $250,000 on property damage liability. That's one that sometimes gets overlooked.
Okay.
And that is if you hit another vehicle or multiple vehicles or a building, that's what would pay for damage to those. Because a lot of times people only have $100,000 for that coverage. And if you cause a multi-car accident, you can blow through that $100,000 pretty fast.
Oh, wow. Okay. Y'all were bringing me up to speed recently on such things like jewelry. So how does that all fit in?
That does not fit in on a personal umbrella standpoint.
Okay.
So I'm glad you brought that up because umbrellas are probably the most misunderstood type of insurance out there. People think, okay, it's umbrella, it goes over everything.
Yeah.
No, it's only a liability coverage that will kick into place if your underlying liability limits are exhausted. So your jewelry would be scheduled articles that are either endorsed to a homeowner policy or a separate type of insurance policy. The umbrella would not go over those at all.
Okay. So I had made a statement in terms of one of the things that I try to do as, you know, a financial planner, which I tell people, and I hope that we're meeting what it is that we promised, that we're going to help them with every aspect of their financial well-being. And I feel that property and casualty plays into it. It doesn't mean that I'm actually educating them on anything besides making sure that they're getting with their agent on a regular basis. And I'd said something along the lines, you know, every 5 years, I'm going to make sure that I have this conversation. And you guys are like, well, what's going on in the world right now? They probably want to be getting with their agent more often than every 5 years. What's going on where people end up getting where they were appropriately insured and now all of a sudden they're underinsured?
Certainly from a jewelry standpoint, we chatted with it offline a little bit about gold pricing and things like that, where you've had a piece of jewelry for $6,000, $7,000 for the last 20 years. That ring could significantly be worth more now. So it's a good idea to get an updated appraisal and then sit down with your agent and discuss what that means to your policy, whether it's scheduled or on a separate policy.
Okay. All right, let's see what else I got here for you guys. I'm sure I'm covering some of these as we go. All right. I think we're touching upon this, but this is going to be interesting. What insight you guys got. Now let's talk about the opposite of full coverage. Where do you think you see opportunities be for that frugal buyer to share in some risk? If you had to pick an opportunity to save cost, where would you suggest the best savings can come from for the lowest financial risk?
I would offer on the auto side, certainly some of the monitoring products that are out there.
Okay.
I believe they're well underutilized in this area. It's one of the largest savings that you could perhaps get out there on any auto policy.
I read about something called usage-based insurance, or is that just one name that gets?
This is more monitoring your driving characteristics. So giving insurers the ability to know what you're doing on the road with your vehicle. The more information, I heard this last week at a conference, the more information that you can give an insurance company about you yourself, the better we can underwrite you.
Okay. So are there some tools that you connect to your car in some instances where you're giving them information that way? They know that you're not speeding. They know you're not driving, looking at your phone.
Correct. So the way this started years ago, it used to be a plug-in device that would plug directly in your vehicle. A lot of them are moving now to where it's it's on your phone. And so it's
so you're driving, looking at?
Yeah, no, you're not supposed to be looking at it, but yeah, so that's how that's done. And then if I can piggyback off of that on the homeowner side, there are a lot of discounts that are now available for flow-based water usage type devices. So they'll check and see if the system thinks that there's a leak possibly in your house, it can alert you to your phone, and then even possibly shut off your water. So you have those types of devices. And then even for folks that have backup generators, attached to their homes, you can get discounts for that as well. So anything you're doing like that to try to reduce your exposure to loss.
Like a sump pump type thing?
That as well. Yeah. If you have a battery backup for your sump pump, discount in some cases.
That would sound like, that would make a lot of sense. I'm sure there's all sorts of water damage that comes out of that.
Absolutely.
Power. All right. That's really good. Useful. Anything else on that topic? Oh, guys don't have a lot to save money. Come on. Oh, all right. If you think of any, please jump in at any time. Okay. We all know that the size of the deductible can have a real impact on our premium. We also know that if we use our insurance too much, we can see a price increase. Take the dynamic of these two together. What are some thoughts? I would like to hear from each of you on this, if we may. Mike?
So deductible is something that has changed over the years from how to use it, how to use it in the best interest of yourself to get the lowest possible premium. One thing that we certainly have done is try to educate people that $500 for comprehensive, which is basically all your non-moving damage except hitting the deer.
Okay.
That's comprehensive. And then you have a collision, which is your moving damage.
A lot of hitting deers in Ohio, that's true.
So we try to get beyond, many people just have never thought about their deductibles.
Okay.
So what makes sense? What can you reasonably come up with in an instance if you need to pay a deductible?
So you want to work with them on the liquidity first. What kind of liquidity do you have if an event were to occur?
What can you quickly get your hands on? And then how often do you plan on filing a claim? Not everybody files claims. A lot of people will go and have their windshield repaired on their own. So why would you carry a $0 deductible for comprehensive if you're not going to file a claim? Because that certainly can impact your rates down. Any claim can impact your rate down the road.
Okay.
So how do you manage that whole thing? And having a discussion with your agent can help maybe uncover some of that.
Okay. Mark?
Well, so we're in the same boat. We try to encourage our clients to have the increased deductibles because there is premium savings available. However, there is a certain point to where the savings may not justify the increased deductible. So if somebody has, for instance, we'll say $1,000 comprehensive deductible, and if they quote going up to say $2,000 or $2,500, there might not be enough savings. I mean, they might want to say $50 a year. So it's not worth taking on that much risk.
Yeah.
There's not enough savings to be had. So that's something that I would encourage folks to talk with their agent.
So it's not a blank. It's not a blank.
See. Correct, because the savings may not be there in every case.
Okay. All right. Mark, I think you teed me up for this one. So I'd written a number of the questions today myself, but I, of course, wanted to go to the experts, and you provided me. So here's the question. Is there anything in the personal insurance marketplace that is causing disruption or headache for policy owners other than increasing premiums?
I would say, at least for us, the biggest thing is how roof claims are now handled. So every insurance company has kind of begin to take a different approach on how they're settling roof claims and then what deductibles they're requiring for roof losses, especially for wind or hail claims. All
right.
Clarify. So you have some companies that now require a percentage deductible for wind or hail claims. So like 1%, for instance. And keep in mind, it's not 1% of the claim amount. It's 1% of the insured dwelling amount. So if somebody has
$600,000 home, there you first 6,000 is coming out.
You got it. So that's one component of it. The next component is a roof replacement schedule. So depending on the age of that roof, you may not get 100% replacement value.
Yeah.
So they're treating this more like they would an auto claim.
Yeah.
You have a 6-year-old car, you're not going to get full replacement value for that car. So it's the same thing. The roofs, the way they're pinning out, starting to decrease based on the age of that roof.
Yeah, I mean, I just have to be honest. We all remember living in the Midwest here that, what was it, like 2005 or 6 or 7 or somewhere around there? We had a couple of storms, and then the vultures would at everybody's door, knocking on their door going, I can get your roof replaced.
Yep.
And how many people, let's be honest, got roofs replaced that probably the insurance companies, sounds like they got smart.
Yes.
We want to pay what we owe, Rob.
Yep.
We want to pay what we owe, what the policy says we want to pay. And we generally do. But that 1% deductible, at least for us, has become mandatory now.
Okay.
And the other thing I'll share is we touched on storms a little bit. I'll just give you a statistic from our company. Ohio this year is the number 2 state in claims in all of the United States for State Farm.
Okay.
We have more claims in Ohio this year than any state other than Illinois.
Why do you think?
All of these winds, that storm in March, the Friday and the Sunday storm, although south of here, not bad, north up along the lake, an absolute, really a problem. And we're still working through claims. We still have people from out of state in town, all over the northeast part of Ohio working through those claims. It's been a rough year. And so that is all necessitated the increase in deductible to a mandatory 1% now.
Okay. Do your clients on average get appropriately engaged in these discussions? Because this sounds like there's a lot of, Like, for example, I'm pretty sure that tomorrow I'm having my meeting with you.
Correct.
Where in the past it was often me asking to have the review. This, you actually proactively reached out to us because you saw something. Well, I'll find out tomorrow what it is that you saw.
Right.
So are people getting appropriately engaged in these decisions, since there are a number of them that could be very impactful and certainly keep people from getting upset after the fact?
We're trying our best to be proactive and reach out and advise them to changes on their policy where things like this could have a big financial impact on them in the event of a claim. Because like you said, it wasn't that long ago. Okay, somebody pays $1,000 deductible, gets a brand new roof that might be 20 years old. Well, those days are over.
Okay.
We're trying to alert people to these changes and educate them the best way possible. Some take us up on our account review offers, some don't.
Okay.
We certainly understand the fast changing dynamic of insurance that a lot of your listeners are experiencing. It is a different world. Even, Marc's been in it longer than me, but even for me, who's been in it a shorter period of time, it's been a whale of a change in the last 3-4 years for people in our positions. And we're empathetic with people. That's why we want to have those discussions. Our staffs are fully available to meet with people and go over this stuff. And if you take us up on it, we're going to point you in the right direction for what we think you need to have.
Here's where I'm going to look at you all. Okay. What they do for a living is they're fully booked to a certain extent. If they're reaching out proactively, fantastic. That is not the norm. This falls on you. So you have a car, you have a house, you have an apartment. You need to be regularly. And to me, I'd say now we're to the point where I used to say every 5 years. I'd say, every 2 or 3 years. You want to make sure you're taking a half hour, an hour of your time every 2 or 3 years, sitting down with your property and casualty agent and making sure that your insurance is still appropriate. All right. Off my soapbox. All right. All right, we touched on replacement cost, but Mike, I have a question for you on replacement cost, both for the dwelling and one's belongings. I highly encourage all my clients to have in-depth sit down with their agents every 2 or 3 years. We all know that you'll have many policyholders where the only time you hear from them is when you have a claim. Being that home prices have gone up significantly in the past 5 years, what risks and opportunities exist in how you look at replacement cost coverage?
Certainly, Rob. One of the things we are certainly monitoring is replacement cost. We use sophisticated software to evaluate what your replacement cost is. It pulls in quarterly numbers of raw materials, labor costs, all of those things to create, and then based on the characteristics of the house that we interview you with, it creates that number of what it would cost us to rebuild that house should there be a total loss.
Is there an alternative of actual cost where I know this is what, in some instances it may say, okay, I have a nominal. Is there any such things where there's a nominal coverage for replacement cost, or how does that get determined?
Well, I mean, you can either have replacement cost, you can have actual cash value.
Cash value. Okay,
got
got it.
Depreciated amount.
Okay.
So, piggyback off of what Mike mentioned, we also utilize software. Most insurance companies have their own software.
Okay.
Where you plug in the information that gives you, here's how much it would cost to replace your house. So along the same lines, I would encourage your listeners to make sure if you're doing any type of home renovations, you're finishing your basement off, you're adding an addition, be sure to let your agent know, because this affects the replacement value of your home. And that's one area where we've ran into over the years where people may finish off their basement or lower level. They don't let us know, and then they don't have proper water backup coverage. So that sump pump fails. They only have $10,000 worth of coverage. Well, that's not going to be enough to address the claim.
Rob, I'll give you an example. Probably a year ago, I had it was a Friday night. We had big storms rolling towards the area, and I had 2 customers literally within a half an hour call me and say, I just looked at my policy. By the way, I just put a 60 by 80 pole barn on my property. Is it insured? Well, no, because stuff that's not attached to the house is under a separate coverage on your policy. Okay. And they only had 10% of their coverage nowhere near enough to cover a 60 by 80 pole barn. And so we quickly made adjustments and got taken care of. But those customers hadn't had conversations with their agent, didn't let us know to go off Marc's point. And then fortunately we caught it before the storms came through.
Oh, okay.
Mm-hmm. So,
all right, yeah, that's a good thing we didn't bring up. Most people in Ohio have garages. I grew up in New York that most garages have been turned into another room. Okay. So garages offer discounts?
Typically, no, I don't think that's really a rating factor that I've seen.
Okay.
But Mike's absolutely correct. So, if you do have somebody that's in the house and they move out for, school, or they're just moving out to get started, we really need to know where that vehicle is, because that certainly affects premiums. And we've had quite a few clients that leave Ohio and go to other states and get sticker shock. They don't realize that Ohio actually has consistently some of the least expensive auto insurance.
Absolutely. One of the fun things about moving here from New York was getting new insurance.
Yeah, good. Absolutely. The other thing, in terms of notifying your insurance carrier, and I'm sure you're running into the same thing, is undisclosed drivers.
Yes.
So please make sure that you have an obligation to let your insurer know who is regularly using your car.
Oh, okay.
And it's very important because perhaps, depending on the circumstances, if that person, I know some carriers have a hard and fast rule. Some will look at the scenario and say whether or not that claim should even be covered.
Okay.
If an undisclosed driver is in an accident in your vehicle, because the insurance follows the vehicle.
Great topic.
Absolutely correct. Because I have seen that with one of the insurance companies we represent. They now have that on their auto declarations pages, where they will pay lower limits of insurance, lower liability limits, if an undisclosed driver causes that accident. So that's a very important topic.
Okay. What else is going on in your guys' world? Anything else you can think of want to share?
I think we've had a lot of hype.
Yes.
You did a great job.
I didn't find one time to get Bibberty into this conversation here, so I'm going to throw in Bibberty. Okay. All right. So, Marc, I do not intend to pit you gentlemen against each other, but there may be individuals in the audience looking for a new agent. What do you pride yourself on in your service delivery?
So we pride ourselves on a couple of different things. One is we're independent. So that means we represent multiple insurance companies.
Okay.
So this gives us a little bit of flexibility to find the best fit for our clients, as far as coverage and price. And if one company's rates are going up, we can shop them with our markets.
Mm-hmm.
The other thing, as far as delivery, service delivery that we pride ourselves on is that we are locally owned, locally operated. We do not use carrier service centers. So if any of our clients have a question, a policy change, a claim, they can call us and speak to one of the folks on our team. They're not calling an 800 number and speaking with somebody they don't know. And a lot of agencies are starting to move in that service center direction. We're not doing that.
Okay, very good. All right, Mike, you work for State Farm. I think I mentioned it beforehand. Having you here today was because when I have this conversation with clients, often I'll be like, oh, is your agent a broker where he can use multiple? And I sort of got to the point over the years is if I hear USAA or State Farm, I'm generally hearing people are very satisfied. And so working for State Farm, what advantages are there for working for someone like State Farm, who is by far the biggest insurer?
We're a local company too. I pay taxes locally. I employ staff locally, as do hundreds of my counterparts in the state of Ohio, but we're local with a large company presence, meaning in a catastrophe situation, we have resources beyond anybody's wildest dreams of what can happen. And you see pictures of it, and it doesn't mean we're the best out there, but we certainly have a wide variety of services that we can provide. So we're a local company with a large feel, that can get things done, things done quickly and reward customers for their tenure and their loyalty in some of those pricing decisions that we make, because we have a broader picture of again, the more information that we have about you and the length of time that you've been with us, we know more about you and your potential risk of a loss.
Okay.
And so those are what we pride ourselves on.
And I'm going to have to ask you what everybody here has been wanting to know. What is Jake really like?
I had the pleasure of being at our convention last week, and he is probably the most personable and energetic human you will ever meet. I mean, I saw him shake thousands of hands in a 6-hour period this week.
Okay, gentlemen, I want to thank you for your time and your fantastic insight. Insurance may be sometimes boring, but I don't agree with Doug Jr. It's not dumb. It plays a very important role in every family's lives. So please make sure you have a qualified agent. Meet with them regularly. It's not boring if you are making quality decisions and sometimes money-saving decisions. From everyone at Money Matters with
The Health Whisperer.
Until next time.